Real estate values don't drop in Southern California. The housing market is different here. Yeah, I've been hearing that since at least the global financial crisis. Well, guess what just happened? Median home prices have dropped in the most surprising of places. In this video, I'm going to show you exactly the surprising places that prices have dropped, how strong is buyer demand, what's going on with single family homes and condos, and let's put the rising home inventory into perspective. It's time for the Southern California Housing Market Report. And away we go, starting out with Orange County, and we're looking at Mays. We've got 2025 all the way back to 2018. So we've got pre-COVID data, COVID data, post-COVID data, and what's fun here for this chart, we've also incorporated the mortgage interest rates. I know, lots of fun. If you're loving these numbers, you're my kind of peeps. Looking at mortgage interest rates, we can see that year over year we're down. We're off of the 7% that we had this time in 2024 and still in the high sixes. So not getting any reprieve on mortgage interest rates. Look at 2021, 2.97%. Don't you wish you would have bought everything? Well, it would have been tough to buy everything because you can see the white line, which is pending sales, that spiked, and new listings, the red line, there just weren't that many homes for sale. There was lots of competition, so it was tough to lock things up. 2018, 2019, more normal years for inventory and number of properties going under contract. What do you notice looking at 2023 for the number of properties going under contract? Well, we've been flat since then. It has dropped off the peaks of number of properties going under contract in 2021, and we've been lower than normal years, lower than where we were in 2020, just as COVID had started. So the other thing we can see is we see a drop in the number of sold homes. That shows that we had a drop in pending sales before this month, and that's what's leading to a drop in closings. Just as when you look back here in 2020, the reason the number of closings were so low, at a record low for Orange County in May of 2020, is because we had low number of properties going under contract in the months before that due to COVID. Number of new listings has actually dropped year over year, but still low levels. As the mortgage interest rates are way up here, we're seeing that demand is way down here. And once we get into the median home price, it's going to get even more interesting. Los Angeles, you'd see that crazy drop in the number of pending sales, number of properties going under contract due to COVID, and a similar tale where we are flat for the number of properties going under contract. We're seeing an increase in inventory, not to where it was pre-COVID, but it's definitely marching up in LA. Riverside, look at that crazy drop in the number of sold properties back there. Slight march up in inventory and flat for pending sales. So inventory is seller supply, and the number of properties going under contract, that's buyer demand. It has remained flat since 2023 when mortgage interest rates have been up. San Bernardino, same trend. Low pending sales. No surprises here. Mortgage interest rates are high. Our new listings are down year over year slightly. So we're not seeing a huge surge in inventory in any of these markets. Now, Ventura, always march into its own drummer. Those pending sales are down lower this year and lower than any time we've had any other Mays in the past, while our inventory goes up. But Ventura is always doing its own thing. San Diego, flat demand from buyers, slight increase in number of new listings. The same tale across the board. One of the only places you're going to get the multifamily data for Southern California is right here. And here we go again, going from May 2025 back to 2018. And with mortgage interest rates overlaid on here, it shows us what happens when mortgage interest rates increase. And really what it does here is it changes the amount of cash flow that comes out of the property. When you've got to pay debt service, you don't have as much left over for cash flow. And don't forget that most of the mortgages for buildings with 5 or more are going to be commercial, and those are going to be adjustable rate, and those are not going to have a cap on that first reset, so they're going to be fixed for 5, 7, 10 years, and then they're going to adjust. So if you went ahead and bought a building in 2020 and had 3% locked in and you're going to reset now, your mortgage interest rate is it's going to more than double. So that needs to be factored in. So we're seeing how the amount of inventory year over year dropped, slight drop in the amount of properties going under contract, nowhere near as low as it was in 2023 for demand. I have a 22 unit building in Eastside, Costa Mesa in Orange County, and we listed it at a 5 cap, ended up with 5 offers. It got bid up over list. All contingencies are removed. That one's going to close for over $9.5 million. So properties are still trading even in these crazy interest rate environments where it's tough to cash flow. LA multifamily, it's been pretty consistent in the number of listings that we're seeing coming, and demand has been low as well. Many of these buildings, once you get to the 2+, are going to fall under the rent stabilization ordinance in LA City and LA County, and that means that rent increases are capped, and it's tougher for these properties to pencil. Where owners get in big trouble, unfortunately, is when they inherit it from a family member and Prop 19 resets their low property taxes and their rents are still low, can't adjust those, and suddenly they find out there's no cash flow. Riverside saw that spike in 2024 and the amount of inventory that was listed. That's since dropped. Demand has been increasing from that lows that we had in 2023. San Bernardino, just like Riverside, tend to be a higher cap rate market and pretty flat for the amount of inventory, pretty flat for demand. Nothing exciting here, no crazy spikes. We were seeing in Riverside and San Bernardino an increase in inventory in the past few months, but that has since leveled off. Ventura, what are you doing in here? A lot of spike in new listings, actually going back to 2021 and 2022, but definitely a low level of demand. San Diego, spike last year, drop in new listings, flat year over year for demand, but with fewer new listings hitting, this is closing the gap between new listings and pending sales. Not as tight as it was maybe here in 2022, but still a balanced market for multifamily. Again, these mortgage interest rates making it difficult for a property to pencil with cash flow so low. Median home price madness. It's about to get interesting, although I hope it was still interesting before we got to this part. When I share the median home price with you, I use my handy dandy InfoSparks tool, and I come in here and I select single family, condo, townhome. So this is a blended report. It's the way I've been doing it. It's the way the data is compiled in the section you just watched. Now the Altos Research reports, you can split out houses and condos. Sometimes when you get data in the news, it's just single family. Sometimes it's a blend. I've been blending it, and it's all been laid out right there. But here's where it gets interesting. So we can see month over month for the median home price that it went up for OC and LA. Riverside, it dropped. And we can see the numbers here. The year over year price increase is 0.8% for Orange County for median home price. It should be going up more than that. That is very low. And then you factor in inflation. Even if the inflation numbers come in low, that's not exceeding inflation. So the properties have actually lost value. LA, 2.5% year over year. Riverside has lost value in the year, especially when you factor in inflation. But here's what we need to do. Let's take out condos and townhomes from these numbers to see how it affects them. And we're back. And we can see that month over month, Orange County's lost value in median home price. LA's actually increased more, and Riverside is down for the single family homes in Southern California. So we can see that now year over year, we have a 1.2% drop in value in OC for the median home price. And LA, it's 3%, and Riverside is down 1%. So what we're seeing in the case of Orange County and Riverside is that condos and townhomes were buoying the market when we blended the data. I wasn't trying to trick you, it's just what I had been doing. When we pull that data out and we just look at the single family homes, we can see values are dropping for single family homes. And now switching over to our other 3 counties, we can see that we are up in San Diego, down in Ventura, and down in San Bernardino month over month. Should be going up this time of year. Not moving in the correct direction. Typically, when we get to the June or July data, that's where the median home price changes and starts to go down. Year over year, 5.2% increase in San Bernardino. San Bernardino was slowing in their year over year, but they've since picked up according to this data. Ventura is up 4.1. So despite those crazy loops everywhere in the housing data when we show you on our other reports, they're up year over year. San Diego is only up 0.3%. Let's take out the condos and see what happens. It's different here. The condos are actually pulling the market down in some of these spots. So now that we can see that the Month over month numbers are now all up or very flat. San Bernardino, the increase is even bigger when you get rid of condos, 6.7% year over year. So the value for houses has increased. Ventura 4.8, San Diego 0.9%. So this is a case where when we blend the data, it looks artificially low. And then what we had for Orange County is it was making it look artificially high for year over year. So just a different way to parse the data. Do you think there's value in keeping those numbers blended, the houses and condos, or would you prefer to see houses separated from condos when it comes to median home price? Let me know in the comments below. If you're thinking of buying or selling real estate in SoCal, you could always hire your cousins, uncles, nephews, sisters, friend who just got their license, or reach out to us, a team of professionals who've been doing this for almost 20 years. In the immortal words of Monty Python, and now for something completely different from Altos Research, just a different way to look at the data. I've been wanting to show you this. If I put it all into a video, it'd be 2 or 3 hours long. I don't think I could keep your attention for that long. We're going to show you the inventory, and we've run through an inventory before, but what's cool on this report, we can go back all the way to 2014, see more normal years, if there's anything such as a normal year. And this can also be run to show condos and townhomes in addition to single family home. We're only going to do single family homes right now. So these black dots, they call them pips. Those are the yearly pips, which is kind of fun to say. The year over year amount of inventory. And don't forget, this isn't just new inventory like in my first report that I show you. This is actually the full market inventory. We have seen it increase recently. If you only look at this tight band here of 2020 to 2025, it will look like inventory is up for single family homes, and it is. But then you put it into context, you give it perspective, and that is you show more normal times. And when you do that in Orange County, you see that we are getting closer to more normal inventory levels. In fact, we're still off some of the more normal years. There was more inventory at this time when you look at the yearly pips. That is helpful to see and put it in perspective. Now, of course, interest rates are higher here than they were in years past. So that has led to a market that's less affordable. Plus, prices are higher than years past. So definitely a less affordable market. LA, similar thing. This is a high level of inventory for single family homes as compared to the past couple of years. Not as compared to years past. Now, much closer than Orange County to the yearly pips of years past, but not a crazy level of inventory. Not sure why there's this big spike here. That seems like maybe an error in the data, but it was a crazy time when we had a bunch of bank-owned homes coming out. We've talked about that in our other reports where we discuss bank-owned homes. And then looking to Riverside again, we can see closer to normal levels of inventory. Not a huge spike as compared to times in the past, but a huge spike when you compare it to the past couple of years. San Bernardino, inventory up, in fact, higher right now than any time in the past few years, but not higher than normal years, closer to that. So when you look at this and you compare and say, oh my gosh, look how high this is, make sure you put it into context and understand what that means as compared to these other years. Ventura, how you doing, buddy? Ventura, up, but not as high as years past, getting closer. And then our buddies in San Diego, let's see, it's up, almost higher than it's been in the past few years, this peak here, but not as high as where it was in normal years. So again, context, perspective. Let me know your thoughts in the comments below. Make sure you subscribe to those Altos Research reports, and you'll get the bonus of our free weekly email newsletter where we cover topics like this, plus a whole lot more you're not going to want to miss. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to help you.